the last two is Bitcoin. I think Bitcoin for the same reason as gold. But again, these are all going to take different paths to the same destination. And so what it allows you to do is still take advantage of diversification. Bitcoin is flawed with its own things in the end, but I think as taking it on a path towards the debasement final destination, it's got some interesting diversifying effects. And the last is just generally what I call liquid alternatives, right? And so this is stuff that you are able to know what you own, right? So this isn't private credit or private equity.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hello, everyone. Welcome to the Real Estate Pros Podcast. I am your host, Q Edmonds, and you guys already know what I'm going to say. I'm excited to be here. I'm excited about our guests. I'm excited for you to learn things through their lens, from their perspective. There's always a unique perspective from our listeners, yes, for our listeners and viewers. And so I'm excited today to introduce you guys to Mr. Branden DuCharme. How do I do, sir? DuCharme? Did I nail it, Branden?
DuCharme.
DuCharme. There we go. DuCharme. Man, listen, I'm so excited to have you here today. How you feeling today, man?
Great. It's an excellent day in Southern Utah. Beautiful weather as always.
I love it. Well, listen, I listen, we don't have to waste any time. I want you to take our viewers into your world. Let us know what your main focus is these days.
Mhm.
Maybe if you want to take us on a journey of how you got started, and then tell us what markets you're operating in as well.
Yeah. If anyone wants to really get my background or how I got started and everything, the quickest way is actually just this week, I rebranded my own podcast. I was doing it under my firm's name of DuCharme Wealth Management, and we rebranded that to the Tall Oaks Podcast. It's a semblance of a multi-generational impact and story. I have a bit of real estate experience. I'm going a little ways back before I was managing money professionally for clients and managing private wealth. And I think the biggest takeaway is I see the really big disconnect in the real estate community between what they're doing, what has worked and what they think is going to work, and the headwinds they're facing, the risks that they're not calculating for, and the opportunities they're not taking advantage of, right? And so I think as we have some of these economic shifts, markets have changed, market structure has changed. And certainly I don't have to tell everyone that the interest rate environment has changed. But the plays of yesterday, I don't think are going to work for the same reasons. Some of them will, and some of them might work, but won't be optimal, I think. I definitely don't want to be Chicken Little calling, the sky is falling or anything like that. But it's been interesting taking an exit from the real estate industry as a full-time, real estate professional that way. And in the last several years, I've operated as the CFO of a real estate partnership I was involved in. And so we're still operating very close to real estate, and still operate pretty close to real estate because it matters. And I think hard assets matter, but now typically approach it from evaluation of larger real estate opportunity sets and macroeconomic conditions, right?
Absolutely. Absolutely.
Yeah.
I love it, man. I love it. I know you and we was talking a little bit backstage. of how you serve your clients. Man, I love the way that you serve your clients. And I guess one of my questions is, where does that passion come from? Where does the passion to really serve your clients when it comes to wealth management, managing their portfolios? Where does that passion come from, sir?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, I think the easiest way to really dig into that and keep it short, obviously we only have like 30 minutes a day, is at heart, my grandpa is the living proof, or was the living proof of the American dream. And please check out my episode recently of the Talks podcast where I explain the family story. But in the shortest way possible, he grew up in the Great Depression in foster care. His parents couldn't even afford to feed him or take care of him. Made a name for himself, came back from World War II, taught himself how to invest money, became a real estate developer. It was really heavily involved in real estate, built homes, actually was the architect of the homes as well. And in the 70s, as he saw the recession coming, actually, he was able to pivot and look at his own life circumstances. He pivoted from building spec homes and aggressively developing to taking a job actually for the government, and ended up retiring as the director of housing and urban development for Wisconsin. Right. And really, really just smart guy that was totally self-taught, totally self-made, and looking at the lessons he taught my dad and myself growing up on the same farm is you don't have to be exact, but you have to use some prudence and care, and you have to be interested in the things that aren't going to get you wealthy the fastest, but the things that are going to keep you wealthy the longest. And one of the things that you should be able to do is make prudent decisions, particularly around your currency, right? And so you couple we have this big belief and faith in the U.S., greatest country on earth, no doubt. I'm a veteran myself. And so I believe in the American dream. I believe in so much of what the government stands for, but I'm also passionate about what they're currently doing as someone that's kind of more libertarian minded myself. I think what they're doing with the currency in particular and the effects it's having on things is really changing the environment. And so what I'm passionate about is I understand that. And as somebody that loves this country and loves my fellow countrymen and women, I want to have the opportunity to bring as many people along with me to success on navigating this unfortunate period in American history, I think is how it will be viewed in hindsight.
Man, thank you for that story. Thank you for bringing in why you're passionate, bringing in the story about your grandfather. It really shows why you're passionate about what you do. Thank you for all your service to this country. I really see it, man. It's really shining through with that story. And so I love, again, the way that you are dedicated to serving your clients. And I love the fact that you told the story, right? One thing I always say is that we like to talk about the success, but sometimes we don't want to talk about the journey to get into success. And so within your world, has there been times when you had to overcome, in the real estate world, we say, deals go sideways, things get real. There's times when you have to pivot fast. Do you have any of those type of stories within what you do, sir?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, well, in my world, when you look at forecasting and making capital market assumptions and having to make decisions today for how you think things are going to be in 18 months or 2 years or 3 years away from now, you have this trade-off you have to make, right? Is do I want to look right now, or do I want to look right then. And you kind of only get to pick one typically, right? Because what you find is you can make a forecast and it's going to look maybe not right until it comes to fruition, and you will look sort of stupid along the way to outside observers. So in particular, back in 2021, I was talking about inflationary pressures, the havoc that it could cause in the markets in 2022. I was, cautioning people to be careful on acquisitions of real estate in 21. I thought there was too much euphoria. And as interest rates rose in 2022, there was a number of times that I got invited out to real estate functions, and mortgage lenders would be saying, rates will be back down by the end of the year. They're going to be back down in the threes. Don't worry. And, and it was funny. I could always look at them and say, like, you read Barry Habib, don't you? And they're like, yeah. I'm like, well, he's wrong. And so I got a lot of hate actually from the real estate community that, because I was kind of the wet blanket. I was saying, like, look, if you got to buy a deal or you got to refinance something, lock it in now. You're going to have probably the best favorable terms you might get for a very, very long time. And I think people don't quite really appreciate what's going on under the macro forces with interest rates and the headwinds facing particularly certain segments of real estate. One of the things to expand upon that I've seen as I was involved in real estate and around real estate in that community is there's a natural progression of the real estate investor, right? Yeah. We're just we're in a different market environment. We're in a different economy. There was a shift fundamentally in the economy as a result of COVID. And there's a lot of forces at play there that we just don't really have time to dig into today. But the biggest thing people have to understand as a real estate investor that I've observed is there is a natural tendency as real estate investors. There's sort of a progression, right? So you start at maybe house hacking, right? Or you get, you're gonna move and buy a new primary residence and keep your old residence as a rental, right? That's kind of the first play most people take, or they get a small single family townhouse or a condo or something as a rental property. That's kind of their first thing. Maybe they do a flip, and I kind of joke like the flippers are the day traders of real estate. You're really a trader, not a real estate investor, which is fine. I mean, I'm a trader myself, right? So like, I don't say that as a dig. It's just, understand the world you're playing in and the risks that come with it, right? But you end up building up a portfolio of residential real estate properties. And the next progression is what? Duplexes, multifamily. As you grow that portfolio and you're getting a ton of doors, you start looking to 1031, maybe into something like DST opportunities. And get into larger projects, invest in opportunity zones, do different stuff, right? Get into commercial properties, right? Like that's a big milestone for a lot of real estate investors is, hey, I'm doing some commercial property stuff. And the concern that I have is that as people look to become more aggressive because the progress has sort of slowed on, hey, I'm building my wealth, and real estate was going, so it was just breakneck speed for years because of the low interest rate environment. And all of a sudden that's slowing down and there's challenges. And so one of the things you hear in the real estate space all the time is, I have to get laser focused. I'm going to get laser focused. I hear that a lot. And I respect that. And I respect the hustle. But
if you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
If you're getting laser focused on the wrong thing, it's going to lead to bad results. And I only say that as somebody that has been involved and comes from a family lineage of 3 generations that have dealt with real estate, liquid assets, market cycles, intergenerational wealth, and all the complexities that come with that. And so the big thing to understand is that we're now in what I would call a debasement cycle. That's not a large lift to explain that to people, that, hey, what that basically means is inflation's wrecking your purchasing power, right? Inflation's killing your dollar. And real estate investors have the tendency to look at not on capital appreciation the right way. They tend to look at yield, right? They tend to look at metrics like cash on cash return, cap rate on a deal, these sorts of metrics. The problem is that's probably not where most of your return opportunity set comes from. And in particular, those metrics, the largest input or the most sensitive thing it is, the thing it's most sensitive to is the interest rate environment, right? So the higher interest rates go, the higher your cap rate goes. Well, the higher your cap rate goes, the lower the valuation of your property is. That's just simple math. And hey, by the way, the higher interest rate expense is, the lower your cash on your cash on cash is going to be looking, because your NOI on deals is just diminishing. And so capital appreciation. Well, what drives capital appreciation? Well, if you're in commercial real estate, it's the lowering of an interest rate environment, right? And it's because it allows for cap rate compression, which cap rate compression would increase the equity value of your property. The other thing is rent raising. Okay, if rents rise, you have more operating income. It can push the valuation, especially in commercial real estate. And I just don't think that those things really are going to come to fruition. If you look at the macroeconomic data, the ability to push rents on commercial real estate, again, this is all. I'm going to put an asterisk on this whole conversation, right? It's always a great time to buy a phenomenal deal in real estate. And if you find something that's idiosyncratic and just a great one-off opportunity, you gotta take that in a vacuum. I'm talking in the macroeconomic sense here, but if you look at where rents are at on residential real estate, it's already stretched. The affordability is already tight across the country. Commercial real estate, tough. A lot of vacancy actually on commercial real estate, a lot of open office space. And the driver of interest rates going down to improve that is not significant. And what I try to help people understand is things like, hey, if you're betting that the interest rates are going to come down and solve your problems, right? You're also betting that interest rates are coming down and the value of like residential real estate isn't going up, right? So it's kind of like counterproductive for people to think through. But you're facing this huge headwind where rent rolls are going to have a very tough headwind, I think, over the next cycle, well, where wages are not rising with the inflationary pressures. And this creates a headwind for valuation driven by cash flows. I think you also have an interest rate cycle that kicked off that rates should have risen according to the interest rate cycles in 2009. Right? They should have bottomed in 2009 and started rising, but the Fed manipulated them all the way until, I mean, they're still trying to largely in a sense, but a lot less so. And so that's where, now that we've seen that sort of run, I think you potentially have a decade or two of a bias towards the upside on interest rates, if you will, right? Well, that causes a big headwind in valuation from the interest rate environment, right? And if you scrap the leverage out of real estate, right? Like let's all get real for a second here. Real estate is a viable investment and asset class, and it's interesting, not because we can go look and touch and feel it, not because there's the utility aspect. It's because of the prudent use of leverage. Without the prudent use of leverage, real estate is like a bad investment washed in dog water. Okay. And I know I'm the wet blanket guy here, but if you think about it, if you're buying a 4-cap deal, you're making like money market returns and you're taking all the risk, right? You're not getting compensated for your risk. The attractive part is when you can take a 4-cap deal, use leverage, and you're 1 to 5 on it because you did 20% down. So now a 4% return is a 20% return, right? But if you don't use the leverage, this is very underwhelming results. And quite frankly, quite a bit of risk, right? So you want to use the leverage, but in order to use the leverage effectively, the interest rates sort of have to make sense. I don't think they're going to make sense as people are hoping the same way. Now, before everyone calls me a real estate bear or, thinks I'm totally crazy, here's the deal is what I've been working on coaching clients through and trying to understand is I think there's 5 opportunities out there for investors to weather this secular debasement cycle, but still take advantage of the opportunity set given to us by diversification, which is often referred to as the one free lunch you will get in finance. I don't think it's quite that, but that's what it's oftentimes referred to as. And so the 5 asset classes that I think people should be focusing their longer term capital on is largely the first one, high quality, and that's key, residential real estate. And that is simply a function of people want to live there. They will need shelter. And so as money is printed, your rents might not look great and you might have a headwind in that. But should I be wrong in my other 4 predictions, you have some kind of hedge, right? So this is me hedging myself in recommending residential real estate. But if inflation goes crazy, right, your property would adjust in value that way. The other unique thing about residential real estate is it's the really the only part of real estate or sector of real estate that you can get a 30-year fixed rate mortgage. Well, if I think there's secular inflation, I want to borrow a 30-year fixed rate mortgage because I'm going to be paying it back with pennies, not dollars, essentially, right? Which is why the interest rates, by the way, are pushing to the upside, because this is getting priced in by investors in the bond market. But I think we're still at a point where we're being subsidized by pension funds, large institutional investors, and people that are just really missing this trade opportunity. And they're thinking that owning the bonds is still a great deal. I don't want to own the bonds. I want to be short the bonds. Well, the easiest way to be short a bond is by issuing debt yourself, i.e., taking on a 30-year fixed rate mortgage, right? This is like the easiest way to issue long-term paper as an individual investor. And so you've got a great inflation hedge there. Probably not going to be great cash flow, at least in the first several years, but I think it's worth having. I wouldn't recommend people at this point, unless they find a really interesting, unique deal, go out there, risk spectrum, and look for something like commercial, industrial, multifamily. I think those are all areas that have a lot of lurking risk. And so the other four asset classes after residential real estate is large cap US stock. Think terms S&P 500, right? Candidly, at the end of the day, you're not owning dollars, you're owning stock in companies, right? You own Walmart, you own Apple. They own assets. They own the ability to produce cash flows. Whether that cash flow is in US dollars or a different currency, whatever it may be, they're producing, there is something real and tangible there. Even though you just view it as maybe a position on a computer screen, it's real and tangible. And it's supported also by the asset flows of people's 401k funds largely at this point, in effect, a kind of the passive investment move, right? That's been gotten so much attention the last 5, 6, 7, even 10 years now. And candidly, the government's kind of come out a number of times. And if you read between the lines, they kind of say, we're not going to let it go down that far. We really can't handle that pain because there's so much riding. It's become largely a public pension program. Right. And so owning the asset, right, is the important part. Right. So I would recommend people don't get too creative unless you're a skilled professional and trying to get too nitpicky. Be willing to just sort of own the US economy in essence. Right. And you should do okay against debasement in that. The next is precious metals, gold. If you think gold, silver, and the platinum group metals. And that's because the AI revolution isn't going to happen without, and the green energy transition isn't going to happen without those metals. But also there are throughout history a relatively safe or not safe, but reliable store of value in your purchasing power. One of the interesting things about that is that technology, which we're in a rapidly technologically advancing economy, technology actually really is a tailwind for gold, in my opinion, or other precious metals. If you think about it, we look at inflation and we can't figure it out. It's hard to wrap our head around. We think in terms of, the price of everything going up. But if we look at what technology has allowed for, a lot of the price of a lot of things has just gone down significantly. If you think about the price of a TV is one of my favorite examples, right? 10 years ago, we would have bought a 55-inch flat screen TV. It would have been $1,000 or $1,200. We would have been happy to have it. It would have been a luxury centerpiece of most American living rooms, right? Now you go down to Costco, you pick one up for $200. It's no big deal. Everyone's got them, right? Well, we live in this inflationary world, but the price of TVs has gone down 80%.
Yeah.
Well, if you measure it in terms of gold, it's actually even cheaper, like a lot cheaper. In terms of gold, the TV is nearly free compared to the price of gold 10 years ago.
Absolutely. Now I know you got two more. Give me the two more. Kind of streamline the explanation for the two more, because I really want to get this in before we wrap. So give me the other two.
The last two is Bitcoin. I think Bitcoin for the same reason as gold. But again, these are all going to take different paths to the same destination. And so what it allows you to do is still take advantage of diversification. Bitcoin is flawed with its own things in the end, but I think as taking it on a path towards the debasement final destination, it's got some interesting diversifying effects. And the last is just generally what I call liquid alternatives, right? And so this is stuff that you are able to know what you own, right? So this isn't private credit or private equity. This isn't going super far on the risk curve, but this is looking at stuff like managed futures, trend following, macro hedge funds, just underappreciated segments of the market. I know I've been pretty heavy personally in a lot of mines and hard assets, stuff that isn't large cap US stock and isn't, US aggregate bond, right? But whether it's typically some components of trading under the hood. But it's not, whether it's currency trades, macro trades, commodities, exposure, whatever it might be. I think there's an opportunity set out there to grab that as just an additional diversifier that's not correlated or driven necessarily by, hey, U.S. economy good, stocks up, right? U.S. economy good, real estate up. And so I think those 5 things are opportunity sets for people to be focusing on. And it's easy. It's not overly complicated.
Yeah, yeah. Man, I love it, man. I love the way you just took us down. You explained everything. The wealth of your knowledge really came shining through. And so I can see why your clients are so happy with you, happy to have you represent them, because you are absolutely on top of your game, on top of your things. So I thank you so much, man. Listen, before we wrap, if someone wanted to reach out to you, connect with you, collaborate with you, what's the best way for them to reach out to you, sir?
Yeah. Branden at DuCharmeWealth.com is my email. Also you can find me on my website, DuCharmeWealth.com. There's a contact us button there. There's actually a link if you want to just go put some time on my calendar. If you're savvy enough to navigate to our, my bio page on there, you'll find it. And you can also follow me on X. My handle on X is stored _alpha. And you can follow on Instagram, Facebook. We put up reels every day. And on YouTube, my YouTube channel, and a podcast that we syndicate out across all the RSS feed. So Spotify, Apple Podcasts, wherever you get your podcasts, there's the Tall Oaks podcast. And that's my podcast where I talk about sort of all things money and wealth, from portfolio construction, risk exposures, insurances, estate. I talk to estate attorneys, taxes, all of the little nuanced things that typically probably bore people. But for the people that enjoy it, they really find a lot of value in it.
Absolutely. There he is, Mr. DuCharme. Thank you so much. Thank you for your time, for your story and your perspective. I know our viewers got a ton of value out of this conversation. So thank you so much. And to the viewers, listen, you got the value. Go ahead and subscribe. You do not want to miss out on these amazing conversations that we're having. So, Mr. Branden, thank you again. And to everyone else, we will see you on the next time.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.